Good morning, ladies and gentlemen. This is Butch Shorak. It's Monday, September 9th, 2013. Welcome to Market Forecast, brought to you by Options University. Access to this video is for educational and for informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and as always, do not trade with money that you cannot afford to lose. We are not implying or guaranteeing any profit. We are a unit that tells you how to trade, what the risks are, and not what to trade. Taking a look at the last week, looking at our indexes, looking at the Dow, the NASDAQ, the S&P 500, the Russell 2000, we see that we had a reversal, and from those negative numbers we got for the week, up 0.8% on the Dow, 2% on the NASDAQ, 1.4% on the S&P 500, and 1.8% on the Russell 2000. Look at these lofty numbers for the year. As we see, for the year, the Dow up 13.9%, the NASDAQ up 21.2%, S&P up 16, and finally the Russell 2000 up 21.2%. Some lofty numbers for the year as we now look at it. Looking at economic announcements that can affect us this week, we see that on Monday we have basically nothing. Looking at Tuesday, we have more of nothing. Looking at Wednesday, we've really got not much coming out. So what kind of things will cause a market to move on a week like this? Well, certainly economic news. Syria is sitting right there on the forefront. So these are things that could affect the market in a big way. On Thursday, we have our weekly jobless claims report, which is coming out at 8:30. We have import and export prices also coming out at 8:30. And then on Friday, we got PPI, retail sales, consumer sentiment, business inventories. So Friday, we actually will be headed towards some interest as far as economic announcements. But prior to that, there's not much happening throughout the week. First little squeak will take place Thursday morning with our weekly jobless reports. Looking at the S&P 500 for the last week, we see that looking at our overall trend, we were certainly in an uptrend. As we looked at the beginning of the summer, we then went sideways, and then we pulled back down, and now currently we're in what it looks like a sideways trend. However, we are getting a little lower lows and a little lower highs, but we see that we're kind of in this trading range right here. Looking at the last week, we saw that what happened to us, and we talked about this for move to the upside. We went up, hit that 50-day moving average, and now we'll see where we're going to go as we head into this next week. Will Syria have a big effect? Expecting at some point to come down here to this 200-day moving average before the end of October. We still see the 30 above the 50, which are both above the 200. So market looking pretty healthy, looking pretty bullish. However, at this time, we're doing a little what one might call taking a break. Looking at the Dow, we see that we've got much the same. Oh, let's click back one. Looking at the Dow, we see that we show a little weakness here and a little closer to that 200-day moving average. Didn't see the big move up on the Dow as we have this support level at 14,750, and we'll see where we're going. We're really in a tighter range on the Dow, and remember the Dow was the one that led the market up much of at the beginning of the year and at the beginning of the summer, and we see it not doing it at this point. That was we pulled back to some kind of support on the Dow. Next, taking a look at the NASDAQ, which was our big winner for the week, we see that we had a nice strong week where every day we got higher highs, higher lows, and the market is definitely headed back up to some of its previous highs with the NASDAQ. Looking at the S&P 500, the granddaddy of all of our indexes, we see that we're coming close to a crossover here. So that'll have an effect with the 30 and the 50, whether they're going to cross over or not. And we'll see whether that has an effect on our overall trend. Certainly nice uptrend, then a bit of a sideways trend as we got to the last half of the summer. Again, looking for some kind of pullback before we start the best 6 months of the year, October through May. All right, and finally, what happens with looking at the Russell? We see that looking at the Russell, it had a big win for the week, but it looked like it's heading up nicely. Okay, now looking at the VIX, we see with the VIX, there we are. We're having a bit of a pullback as the market starts heading up. At the higher range, right around 15, that's the higher range of our normal range so far this summer, where we ran right between 12 and 15. So we're still got a little volatility in the market, which can be good for you option sellers. Looking at the bond market, we see that bond market hit that 50-day moving average. We talked about that earlier. And through the week, we had a nice little pullback in the bonds, and we have a bear market in bond market as we see it in a constant downtrend. Gold pulled back this week, and we see that we did not quite get down to that 30-day moving average. We've had our cross between the 30 and the 50, and we see that gold has a little more interest, and it's certainly not anywhere near that 170 high that we saw earlier in gold. Looking at the SPY, what kind of volume did we have? Well, Friday we had a big volume day, or at least more volume than we did have the first couple days on Wednesday and Thursday. So saw a higher volume day on Friday as the market pulled back and then headed right back up, giving us almost a spinning top, almost a hangman there, and we're sitting right at that 30 and 50-day moving average. So we'll see what happens with the market as we head forward here, heading into that Syria announcement, and that certainly does have an effect on the market. We talked last week about the effect that war has, usually a positive thing for the market, and we'll see whether that continues. Looking at our other sectors, looking at XLF, our ETF for the financials, it pulls back and looks very much like the overall markets as we see that we've had a bit of a pullback, but remember these are stocks that have been favored by QE3, and until that ends we can expect some bullishness out of XLF and the financials. Oil, look at that, right up near the highs of the summer. Typical of what happens as we go into any of our holidays. So nice move up in oil, and we'll see whether we continue on up higher. A classic bull market here with the 30 above the 50, above the 200, and if we get a breakout, headed for new highs. We'll see. All right, so that's the market as we saw it during the last week, and for those of you that want to hang around, we'll see what effect it had on our horsemen, our Apple, and so on and so forth. For those of you that are not gold members, well, thank you for being here, and if you're interested in other free videos from Options University, watch the end of this, and right at the end you'll find a website that you can check with Options University to look at some other videos that we might have for you. With that thought, this is Butch Shorak, Options University. It's Monday, September 9th, 2013, and this is Market Forecast. Thank you for being here.